Putin declares war on the dollar, and Europe attacks the United States by eliminating stable coins from its territory. In a shocking statement, Russian President Vladimir Putin has launched a fierce critique against the United States for abandoning the gold standard and imposing the dollar as the world's reserve currency. In a video broadcast by Sputnik, Putin not only questioned the validity of the US dollar, but also suggested that gold could once again be the pillar of the global economic system. Putin slammed the dollar, calling it a currency based on trust and not backed by anything. He harshly criticized the United States for using the dollar as a political tool, calling this strategy a grave mistake that is devaluing the US currency itself. According to Putin, this policy has led to more and more countries losing confidence in the dollar, opening the doors to a new global economic order. Putin's stance aligns with recent data from the World Gold Council, which reveals a significant increase in gold purchases by central banks worldwide. The World Gold Council survey received responses from a record 70 central banks, showing that 29% of them plan to increase their gold reserves in the next 12 months. Moreover, an overwhelming 81% anticipated general growth in official gold reserves during the same period. The report also highlighted that 69% of central banks foresee increasing their gold reserves over the next 5 years, underscoring the recent confidence in gold as a long-term store of value. This trend towards de-dollarization and the accumulation of gold by financial institutions reflects a significant shift in the global economy, indicating the possible decline of the dollar's dominance. Putin's pronouncement and the renewed global interest in gold suggest a potential paradigm shift in the global economy. As the dollar faces increasing criticism and challenges, gold appears to be resurging as the preferred safe haven in times of uncertainty. The question that remains is, are we witnessing the dawn of a new multipolar economic era? And now, if we pay attention to what might be behind the MiCA regulation, which is ending the hegemony of Tether, a stablecoin based on the dollar, and cross-reference this information, it seems they are clearly targeting the United States.
The European Union's MiCA regulation introduces strict limits for daily operations and the total volume of stablecoins not referenced to the euro, such as those pegged to the dollar. This measure aims to promote the use of euro-backed stablecoins, reducing global dependence on the US dollar and promoting European monetary sovereignty. The regulation seeks to create a more autonomous and stable financial balance within Europe, diversifying economic influence in the global cryptocurrency market. This decision by the European Union reflects an effort to depolarize the dollar's dominance in financial markets, redistributing economic power. The depolarization could have significant implications, promoting greater diversity and competition among currencies and facilitating a more balanced and resilient financial system. Now, let's analyze Bitcoin and its macro structure. But before that,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
we are looking at the weekly Bitcoin chart and can see that on a macro level, we continue within an upward channel. At the same time, we have experienced a strong bearish impulse followed by a complex corrective pattern where we can see the W, the Y, and currently we are experiencing the macro Z. We are monitoring the Zs with a defense zone. This defense zone acts as its guideline. As we know, as long as the guideline of Z is not broken, we will not consider it finished and will continue to evaluate its development. Meanwhile, this explosive Z has meant a strong bullish impulse. Let's zoom in a bit using the daily time frame. Here we have the strong bullish impulse we've experienced, in which we might already be labeling a corrective pattern. We see the W here and a Y in formation. How can we monitor this? We will continue to monitor the development of the Y to see if this corrective pattern gives us a Z, and then possibly continue with a replica of the original impulse. However, let's keep in mind that the loss of the macro Z's guideline might represent a search for a much more pronounced bearish Z relative to the bullish impulse, to then seek its upward replica, reaching historical highs. Remember, it is not prudent to try to turn around a Z. Therefore, until the macro Z gives us a definitive break of its guideline, we will keep looking upwards. Now let's analyze Ethereum. We are looking at its daily chart and see that we also remain within an upward channel. After this strong bearish impulse that I'm marking, we are experiencing a macro corrective pattern, currently living through the Z, and zooming in a bit, I show you here its guideline. Since this guideline has not yet been broken, the Z continues its development. Notice how this Z has also given us a strong bullish impulse. This bullish impulse is being corrected where we can label a W, and again, similar to Bitcoin a Y. As I mentioned, we are positive on a macro level. Therefore, we will seek a replica of the original bullish impulse after completing this corrective pattern. Considering that losing this macro Z guideline would lead us to a more pronounced Z of this bullish impulse, let's remember that on a macro level, we are experiencing a corrective pattern of this bearish impulse where we are currently living through a Z that we do not consider prudent to turn around. However, we will monitor how the price behaves concerning its guideline. Let's move on to short-term analysis.
In the short term, looking at Bitcoin on the 1-hour time frame, we have come from a bearish impulse that has generated AW, a weak EI, and this entire formation was a Z. This Z had its guideline, which has already been broken, resulting in a black swan event, and that is why we are now precipitously seeking our hidden guideline. That being said, we also need to consider this entire range as a distribution process. There is no doubt about that. Regarding this distribution, smart money, the strong hands that manipulate the price at their leisure, are following all these sales through a supply line. In other words, these investors are protecting their bearish investment. Simplifying the short term, we can say that we have a strong bearish impulse, which is being continued with a channel that may end in a range, and we are waiting to experience a bearish climactic action that might impact. Why not? The point of control of this entire bullish accumulation process. Here, it could stop, but it could also go to seek the first institutional target of this distribution process. We know that when large institutions set up their positions, they already know in advance where they are going to take their quotation, as algorithms are purely mathematical and everything is pre-calculated. Therefore, when that climactic action arrives, it could hit the creek while also reaching the hidden guideline and from there seek some type of reaction. If you wonder whether we will seek the climactic action quickly or continue with a range first before looking for the climactic action, that's a great question, Leonard. Let's answer it. To do so, we will use Ethereum on the 1-hour time frame as well. Here we have the distribution process and its supply line that we have tried to channel as the alpha angle has allowed us to do so. In short, what do we see? If we say that smart money is selling at the top of the bearish channel to defend their position, then after distributing and selling, these players have created this alpha angle with algorithms to lower the price. Considering that we recently sought out the structure, we can say that distribution also occurred here and we have a supply line supporting the price. In summary, we see in Ethereum a strong impulse followed by a channel that is ending in a range, suggesting the bearish trend may continue. Ultimately, the position is being defended here. And before sharing what we see in the short term for altcoins like Solana and Cardano, whose defense zone is an open book that will greatly help us make good decisions, let's discuss the key aspect of understanding what is happening below this defense zone, which is another open book. Now, let's talk about all these issues and regarding altcoins. Let's look at the 1-hour chart of Solana. We see something very similar here. We have the impulse and we are experiencing a channel that is ending in a range. Where is that deceptive climactic action? Basically, what we are asking the market is, hey, you come here with tremendous aggressiveness and volume. Everyone sees it, how tempting it would be for smart money to come in, make it look like it's breaking and that everything is going to hell, for it to end up being a trap. Then it turns around and in the short and immediate term, we can expect the bearish climactic action to look upwards. In the case of Solana, we have a great indicator because this defense zone will tell us that once it breaks, the bearish climactic action in the crypto ecosystem could arrive. What we will do with Cardano is simply monitor and follow up on the defense zone, which is our indicator. Better than moving average crossovers, better than the RSI, better than the stochastic, and better than the MACD, as it will tell you precisely when bearish climactic actions in crypto might arrive. To do this, we wait for an aggressive break of the defense zone, keeping in mind the following. If strong accumulation has occurred here, this group is defending their position here. If they decide not to protect it tomorrow, ask yourself, who on earth will keep buying in the short term? If these institutions that have absorbed a fierce drop to turn it around are no longer available to protect their position, who will? Therefore, we will look for bearish climactic actions in the crypto ecosystem. For Polkadot, don't lose sight of this macro defense zone we see in its 4-hour time frame and zoom out significantly. This potential market trap could still be in play even if it stretches and drops a bit more. The key point here is that we don't necessarily have to consider the potential trap with recovery finished. Let's move to the 1-hour time frame. This can work and stretch much more. We are talking about a macro defense zone. Therefore, let them do what they want. Who knows how they do it, but when a bearish climactic action comes to break through and clear out this structure, it might not drop that much. Let's draw a better picture. Maybe they do something like this. At the moment they clear out the structure, it will be the climactic action in crypto before potentially looking upwards in the short term. Short term, friends. returns short term. If you like this advanced technical analysis, let us know in the comments. Also, give the video a like, subscribe to the channel, and click the bell icon so YouTube notifies you of future posts. And of course, share this video with other trading and cryptocurrency communities as well as your friends, so that knowledge can break boundaries and reach unexpected territories. Good luck with your trading, and see you next time.